You've probably heard that term, right? IPO? It gets thrown around a lot. And honestly, it sounds pretty complicated. But what if I told you that at its core, it's really just a simple story about a big dream? Today, we're going to break down exactly what an initial public offering is by following one of those stories. All right, let's get into it.
This is pretty much the starting point for every huge business you can think of. It's that classic moment when a great idea is ready to explode, but the bank account just can't keep up. And it's the exact problem that our guy Rohan is staring down right now.
So let me introduce you to Rohan. He runs this amazing tea brand in Delhi called Chai Junction. And I mean, people are obsessed with his tea. It's a huge local hit. But Rohan's vision, it's way, way bigger than just Delhi. He's dreaming of chai junctions all across India. We're talking 100 new shops, fancy new machinery, a massive team, but there's a problem, a really big one.
And there it is, 200 crore rupees. That's what stands between Rohan and his dream. I mean, that's just a staggering amount of money. It's the kind of number that's so big it's kind of hard to even wrap your head around it.
Wow. Okay, this really puts it into perspective, doesn't it? On one side, you have his entire life savings, a very respectable 3 crore. But on the other side, you've got this absolute mountain he needs to climb, 200 crore. A regular bank loan just isn't going to cut it. The gap is just massive. So, what does he do?
Well, the answer to Rohan's giant problem is the IPO, the initial public offering. You know, this is the powerhouse financial tool that was literally designed for this exact kind of situation, when a great company needs a huge boost of cash to leap to that next level.
The best way to think about an IPO is like a company's big public debut. For the very first time, Rohan's private business, Chai Junction, is going to sell tiny little pieces of itself, we call them shares, to anyone and everyone. The public gives the company the money it needs, and in return, they get to own a small slice of the pie.
And that's the decision. Rohan is going for it. He's going to take Chai Junction public to raise that 200 crore and build his nationwide tea empire. But listen, this is not as simple as just asking people for money. Oh no, it is a very serious, highly regulated, and pretty complex journey. So how does this actually work? What are the steps? Let's walk through this road to listing together and see exactly what Rohan has to do to turn his private dream into a publicly traded company. The whole IPO process really boils down to these 4 major milestones. First, you gotta hire the experts. Then, you need the big approval from the market regulator. After that, you tell your story to the world. And finally, you open the doors for people to invest. Let's start with step 1. Look, Rohan is a tea guy, not a finance wizard, so he can't do this alone. He hires investment bankers. Think of them as the expert guides for this journey. They help figure out the really important stuff, like how much Chai Junction is worth, how many shares to sell, and what price to set to hit that 200 crore target. Then comes step 2, which is absolutely crucial. Getting the green light from SEBI, the big market watchdog. This is all about trust. SEBI goes through everything with a fine-tooth comb to make sure Chai Junction is a legitimate business and, most importantly, to protect investors like us from getting scammed.
Okay, on to step 3, telling the company's story. This happens through a huge, detailed document called the DRHP. And I love this analogy on the slide. It's the company's official biodata. Seriously, everything is in there. Their business model, their financial history, their big plans for the future, and, this is super important, all the potential risks involved. Once SEBI gives that document a thumbs up, we finally get to the most exciting part. Step 4. The IPO is officially open to the public. Now, this is a really short window, usually just 3 days long. And this is the moment where regular people, you and me, can apply to become part owners of Chai Junction.
So, what does it actually look like to invest? Well, this table breaks it down perfectly. You usually apply in something called lots. So for Chai Junction, one lot might be 150 shares. If they price each share at 100 rupees, then your total investment to apply is 15,000 rupees. It kind of makes this huge, intimidating world of finance feel a lot more manageable, right?
All right, the 3-day window is shut. Thousands of people have applied to buy shares in Chai Junction. But hold on, the story is far from over. In fact, you could say the most exciting, and maybe the most nerve-wracking, part is just about to start. We're now in the countdown to listing day.
So now one of 2 things is going to happen. If everyone loves Chai Junction and the demand is huge, way more people want shares than are available, it's called oversubscribed. In that case, not everyone who applied will get them. It often comes down to a computerized lottery. On the flip side, if the demand is low, it's undersubscribed, and pretty much everyone who applied will get their shares no problem.
About a week or so later, it's the main event,
Listing day. This is when Chai Junction officially begins trading on a stock exchange like the NSE or BSE. A bell rings, trading kicks off, and for the very first time, we get to see what price the open market thinks a share is really worth.
And this slide just perfectly lays out the two possible outcomes. It's pretty straightforward. If the shares were priced at 100 rupees in the IPO and they start trading at 150, boom, you've made an instant profit. That's a listing gain. But, and this is the risk, if the market isn't so hot on the company and the price opens lower, say at 80 rupees, you're looking at an immediate loss. That's the fundamental risk and reward of an IPO, right there.
Okay, so we've followed Rohan's journey from start to finish. Let's zoom out for a second. Why do companies even go through this super complicated, super expensive process? What's the bigger strategy here?
Well, the most obvious reason is the one we saw with Rohan, raising a ton of money for a huge expansion. But that's not the only reason. Companies can use IPO money to pay off existing debt, which makes their finances look a lot healthier. Plus, going public is like a massive marketing campaign. It seriously boosts your brand's reputation and visibility. And finally, it gives the founders and early investors a way to sell some of their shares and finally cash in on all their hard work.
And what about us, the investors? Why do we get so excited about IPOs? Well, for a lot of people, it's the hope for that quick profit, that listing gain. But for many others, it's more than that. It's a chance to get in on the ground floor of a company you really believe in. It's about being part of that growth story right from the very beginning.
So, let's just boil this whole thing down one last time, nice and simple. A business has a big dream to grow, so it asks the public for help. It sells tiny pieces of itself called shares. It uses the money it gets to make that big dream happen. And in return, the investors who helped now own a piece of the company that they can trade on the stock market. See, when you put it like that, it's not so complicated after all.
And that really brings us to the final question, doesn't it? After everything we've talked about, the big dreams, the huge numbers, the process, the risks, and the rewards, if Chai Junction was a real company getting ready for its IPO, what would you do? Would you invest? Definitely something to think about.